Good day, everybody. This is Mike Zuzolo with your Wednesday, June 19th grain market update. It was up, and away on Wednesday's trade. Grain trade had three major themes as I saw it, which continued to drive the strength for a second straight day. Similar to Tuesday's trade, more harvest reports of disappointing yields were coming in for the hard red wheat belt, and that kept the pressure on the shorts and brought the technicals around with the July KC and July Chicago both crossing through some key technical resistance levels, which I think probably introduced some additional short covering after midday. That helped wheat once again to be the leader to the upside for the whole grain complex, and I think give the confidence to the market that it's been needing for the last few months. New crop corn and beans continued their rally against old crop, with the spreads widening back towards the premium in the new crop. That again, something started on Tuesday. A couple new pieces of information to help keep the new crop gaining on the July in the corn and beans, though, on Wednesday. Number one, private trade guesses for acreage numbers came out friendly for new crop, and especially friendly for new crop beans. Not nearly as big an increase in new crop bean acres as maybe the trade was expecting. So we saw new crop beans really come on hard after midday, and I think that was the main reason. Also, we are starting to see more of a solid weather forecast develop among the models of a wetter and cooler pattern for the western corn belt. This is probably going to continue to keep the western corn belt people of Iowa, Minnesota, the Dakotas out of the fields heading into the weekend. Some of the trade was expecting maybe a little bit more field work to be done as we got into the weekend, but I think the models are starting to say that's not going to happen. There seems to be an overall commodity-wide buy signal with the index funds also that we saw on Wednesday. That's probably going to be one of the major features talked about as we head into the end of the week as well, because some of the commodity index charts, like the Dow Jones UBS Grain Index, hit levels up 3% on the day, hitting trading ranges. That helped to give the July wheat a move back up to 2-week resistance, helped give the September corn a move back up above 570, the 585 level. That's the trading range high that we've had in place for almost 5 months. So those supply side factors were the main drivers to Wednesday's trade. Wasn't about demand on Wednesday. In fact, weekly ethanol numbers saw declining production and a buildup in stocks. So supply-driven market, partially weather-driven on Wednesday, would be the way I'd put the wrap up on the grain markets. That's it for now. Go to globalanalytics.biz, and please remember there is substantial risk of loss in trading futures and options. The impact of cycles or current events on prices may be already reflected in the futures. This is Mike Zuzolo. Have a good day.